All right, guys, what's up? Can you hear me? Yeah. All right, cool. All right. So the reason why I said that, why I took most of that position off, um, is because we have this high right here, and technically it's still a short where the continuation moves down. However, you have to take a leap of faith sometimes in thinking when you're spotting reversals. When we see lows like that, where a shark has bitten into the chart, I can't ignore it. So, um, that's where you have your stop for in place, which is fine. However, you can mitigate your risk by taking most of your position off because I know on this move, no matter what will happen, we will trade back from a premium back into or discount or vice versa. So what did we do? Well, you just take the swing here and just negate the complete things here. Let's change that into quarters. Okay. Your 50% is right here. And what did we do? We traded back into premium basic. And this is where I make my money because I'm only like aiming for those 20 points to be made. And in this case, you can see my entry was at 50 and I started to scale out most of the position at 300, which gave me 50 points, which is more than enough to get paid on those type of moves, right? And if you have like a quarterly bias or a monthly bias, we should continue to go up to higher prices. Um, but except it's very difficult to point out the low on this because they can flush everyone out and screw everyone over again. But and that's why I peel most of the positions off. Give me 1 second, 1 second. All right, I'm back. So, and that's why we keep hitting that bat until it fails, right? So, I keep my runner here in that sense. And since this was a discount also, and I can't negate this setup right here because basically it's a change of structure. And all what we did just now was trade back into a discount, going back into premium and vice versa. So that's how we keep hitting that ball. And when does it stop working? Once it disrespects these things and we get market structure shifts, I will look to short again to maybe retarget these lows once we break, for example, this area here to explore lower prices, and I'll keep moving the goalpost up in that sense. Okay. So when you see this low occurring, I will automatically raise my stops, for example, to this level right here, because you do not want price to trade back into this zone. The preferred scenario would be that we start breaking back above and then use this bearish fair value gap to as support where you can resume for potential trade back to these. But I'm not counting on it because the market is very weak in that sense. Okay. I'm not sure if people are going to be participating. Now, time is on the side right now that the London is closing. So if they were short, they're going to be covering. And I'm of the opinion that we should have some more upside, at least to take out these stops right here, right? And these equal highs up here, they seem too smooth for me in that sense. Now, in regards to the swing, what I told you guys about, nothing has changed in that regard because you want to really see a decisive break back above to retest and drop back into the zone, maybe take out the stops from here, and you'll have plenty of time to join that trend. But that's for swing traders. And then see if I can deal some stuff. area. Let me see real quick. Do you guys have any questions of things that were unclear in how I trade from these premiums to discounts? And I'm of the opinion that we're in this big consolidation stage. So, I'm not expecting things to like moon from here in that sense. Like the previous week high is going to be very important for us to break and hold in that sense. And then we can explore to reaching sell zones. Now, ES is a bit stronger, right? We noticed that ES has not taken out that previous day low. However, it did reject in that ADR sell zone that I mentioned, and Nasdaq has not managed to even trade up there. Let's have a quick look at the Dow. That's a moonshot, right? What did they do? Well, they didn't even take out these stops right here. It looks like an accumulation for some more downside, but we'll see. They have the same story here being told with these relatively equal highs up here. I do expect price to trade them back and take them out at some point. I don't like trading a Dow whatsoever. I do it maybe twice, 3 times a year at max. Let's have a quick look to see how we're interacting with this bearish or value gap here. You want to see body closures above, and we're not getting that. Even though we're on the upper half of it, it is giving clues that we're getting higher pricing than what we can expect or should expect in that sense. But that's the reason why I started to offload these longs. So I can decide for myself to feel somewhere off here in that regard. But let's see. That's okay.
Closing order filled. Closing order partially filled. Closing order filled. Closing order filled. Closing order filled.
You keep moving goalpost up for your stops. You don't want it to be trading back into the zone, so this will be your stop. That you can target those highs up there. Notice how we're making that new high and what I've told you guys before in that sense. Let's see if we can get a body close in the next 18 seconds above here. And then we'll see how it interacts and breaks above. And retest this area here. And let me just make the text white and the midline also white, so you know where the premium and discount zones are. It should add as an inversion and did not close above, so we still have some time, a minute. But like for me, it doesn't really matter. Like I will start offloading if we leave this behind the way we are, because I do expect them to trade back into it at some point. And then, but you have to be aware that we're now approaching premium on the day as well. So
check 1 2.
And why is that? If I take this entire range from what we had up here, the high and this low, you can see we're in the upper half portion of this, right? So to even consider going short, you never look for shorts down in whatever range we are in. It's best to say hands off.
Closing order filled.
Reassess
Order cancelled
until higher prices get explored, and look for short setups to unfold from there. So I'm taking these guys off completely, and the reason is we're taking these stops. I prefer them to like really close above and retest these zones. Now, if we drop down to this area here, for example, I might reinitiate the position, but the stop would still be at the same place what I mentioned, which would be here, approximately. Okay. So the same process goes back again. It is discount. Remember the higher time frame discount is right here. So we're looking for fair value gaps to buy into discounts, which is this one right here, in case we wanted to long. Up here, I'm not looking too long. Because even if they go like all the way up here, they will drop it back down into a discount and back up. Now the only thing we got going is that we got these guys here that were short. I expect them to be taken out, and they can be very violent. I made my money for today, so I'm not like hurrying into getting into a position anymore. Because we're approaching the lunch time shenanigans where we're going to be chopping around and taking both sides, most likely. And for a London close right now, it's being fairly muted. Like usually, when we're at a low, you can look for potential reverses to unfold from 5 o'clock. And typically, when we're high, I like to short it for like 30 minutes. And in this case, it was a long. So I'm not sure if they were accumulating lower today. I'm going to leave an open mind to it and just trade it level to level. Whenever we get into a discount, we'll buy. And whenever we're in a premium, we'll evaluate to take shorts, which I do not like doing anyway. So I'll probably skip that trade. Let's see. Do you guys have any questions? Would you like me to cover something in particular? Whatever's happening right now in this bearish fair value gap is not something you'd like to see. You'd like to see speed away from it. Let's see. Optimize. You're asking. I missed the first part of the stream. Not sure if I covered it. You were long into the close yesterday. What action would have made you close along? Well, I told you what I was expecting. If they sell it down into the close, that they will pump it into Asia, which is normal behavior when we get big sell-off days like that. And then when Asia opens up and the midnight opens up, you dump it. Simple as that. We chopped around. During the London session, I took some longs and shorts. We were basically trading into this like range right here. I wait for specific times when they happen, and which was the cash open. You look for a sell down for 30 minutes, and then you just buy it to take out these guys up here. It was a nice order block here that I traded to, right here. See that on the 1 minute highest up close candle that was available, and we tapped in it a few times. So the first time I went long into the OTE buy zone, which I outlined to you guys in the morning, and it gave me, I think, a 30-point trade. Just check real quick and measure that for you guys. 27. I think I got out here. 25, right at this order block right here. So I got 23 points out of that. Did not go short. All I waited was for the cash to do its manipulation around, and waited for specific models to unfold that I like, and traded to this bearish order block that was right here. And the reason was that I exited there is because they left a nice little clue right here that we were going to revisit it back. See that gap here? Now, I think I even swung it from here to this fair value gap up here. I need to check my top step for that. Right here, yeah. And the reason is because this was my order block for the London session, right? Now, look how we interacted it. Okay, sure, we went into the lows of it, but I was expecting it to go a little deeper than expected. And here you got an entry exactly again on the retest of it. So we went through that imbalance, bullish back up, broke the structure right here, traded back into a discount zone. You can see that this is also an OTE. See that? To the tick in there, stop underneath there, target was up here. Very fair value gap. Okay, you could have held it until the extreme target, hit it to the tick. See that? So yeah, that was that. Then what happened this morning? Like, you sell that stuff. We opened up in the gap up, I think it was. Let me just double check here. Yeah. Okay. So this is where we closed yesterday. Right here. That's close. And we opened here. Opened. And what did they do? First thing they did is took out the buy side. That was from yesterday, 4 p.m. See that? One wick up, done. Where we go to, previous day low. And that was your low. I think the previous day low was somewhere around here. Okay, so we flushed down. And then 9:55, I started to look for potential reversal turns. This was also the overextension for the day in that sense. And which led me to believe to trade back up. Where to? Where we opened up, basically. So that was the goal, to get out. You can see also on the chart, that's where I got out and closed my position right here around 328. And then after that, the only thing I did is I waited for this optimal trade entry here and traded it back up. Okay, and if I would have held it like all the positions on, still would have worked, but it doesn't really matter. You get out what you want, right? Now let's go back to the swing here. We made a new high. Notice how we made that high, traded it back exactly to the optimal trade entry window here. And the problem with this trade right here is that you need to have had your entry one tick above and your stop right here. Does that fit your risk appetite? That's the question. You have to decide for yourself. The trade would look like something like that in that regard. And let's go for a 2-to-1 risk-reward ratio. Your exit would be aligning up with these highs right here. See that? And why? We broke back above, okay, trading back into discount. But the only problem is that this has not been acting as an inversion yet. Notice how we closed back underneath it and trading back into that premium of that fair value gap, which I do not like. And I think on the previous chart, I already outlined to you guys that I was liking this zone right here. Sure, there is a little tiny fair value gap right here. Make the chart bigger. Right here that we tapped into, take that one off, make the chart clean again. See that? You could have taken that one, leave that one tick above. But it's just not my type of trade, because this is not 20 points, okay, for me to be able to scale out. This is only like 13 points. For 20, you really wanted to trade at least into here. But we'll see. Higher time frame, we're still bullish, in that sense, in that regard. Even though we had this drop, There's a reason for that. I'm not going to be on the boat yet that this is going to be the high of the year or anything like that. And they can drop down to like a pretty big discount. Still like drop it down 1,000 points and go up. And the reason why I'm not saying that is like we still have some unfinished business right here near 20,050. We have some gaps that I would like to get filled. So that's why I'm not like swinging longer positions for all-time highs yet until we've actually, it has proven to me that we're going to be breaking out again, and that would mean a close back above here. Or it has done what it needed to explore these lower prices. And what I do not like as of yet is that the current low that we have has not really worked around with this zone right here. You know, it's still valid. You know, it's basically what you saw here was a market maker buy model, and then it can just drift up for the remainder of the day and remain range bound. Asking, is there a situation when you would not close on London Open? I, well, I always close it. Because the days that it runs without, like, when you don't expect it to, they are rare. Like, if we're high, London is always a short. When we're low, London's most of the time a buy. Wait for the first 30 minutes. You know, they will always draw down to a specific type of liquidity. Take out either an Asia low and then revert back up. And I think they did that overnight as well, right? Just double check that. Put this back on ETH at the Asian session. Yeah, well. Yeah, they took out the Asia low to the tick. Almost, right? And I didn't even, take the new day opening gaps into account. I think we traded right into it. See that? So when the futures opened up right here, see where London traded to the new day opening gap, and that was your low. So there were double confluences happening there. But like I told you as well, yeah, I was keeping the short bandwagon on because in the past, once we start disrespecting these OTEs, we explore for lower pricing. Simple as that. It's like, sure, you can take a quick trade off of it. You get your 20 points out of it the first time it touches. As soon as we start breaking below it, even with a wick, and we continue back up higher, is when you start looking for potential short entries, i.e. a order block or an inefficiency. Now let's just go to the 4-hour chart real quick, and I'll show you what the resistance was overnight. So we have this bearish 4-hour fair value gap right here. And notice we're staying into the lower portion of it. Now let's drop down to the 1-minute chart. And, well, let's go to an hourly. Much better now. Because then you'll be able to see that you're not actually getting good acceptance back into it. So sure, you got an acceptance in here, okay? You can be on the bull train. You can get like your 10 points or something like that. But this was your clue. See how they dumped it down exactly at 2 a.m. That candle. Okay, they traded it back up. But this was basically your order block right here. Okay? No speed away from it with the distance of that amount means down. But we had a nice order block on the lower time frames. Cam is saying, I was thinking it would trade lower to 22.38. Yeah, I'm sure they will at some point, but When are you talking about? We hit 238 right now. Been there. Done. Maybe more specific what you mean. That I'll mark it on my chart and I'll try to dissect if that level makes any sense to trade towards to. This low here got taken out. So I understand that 238 level from here, business is done. Drop down to the 1 minute, see what you meant with that 238. Ah, you mean this fair value gap right here? Maybe, I think. Is that what you're talking about? Oh, okay, yeah. Now look, it depends on where your entry was in that sense. What you also need to keep track of always are, like, let's say these intermediate highs. You know, when we get that break of structure, see that? You see this high right here? See how this was the change of character, okay? Why? Because we broke above and we created this inefficiency right here. We already traded into it. See, so there was no need to like rebalance any lower. The only thing you could have kept track of on, like, let's say a 1 minute chart, which stinks because there is no really big body, but this would be your breakaway gap. And sure, you can take this entire area, but you know, all these down close candles to the wick. But notice how the bodies are respecting the midpoint of that, right? And the bodies are staying above this high. See that? Isn't that beautiful? And those are precision type things. Over time, you will learn. You don't need to know everything. You know, I highly suggest you focus on creating one type of model and like master that. You know, like if you're looking for reversal patterns, just set an alert on a previous day low or a high and wait for specific times of day. If that sweep occurs, for example, at 10 a.m., then you know, trade it back into premium. See whatever move they had on the upside or downside. Now, I find it very difficult to short in uptrends because there's a lot of yeah, you know, Nasdaq once it goes, it goes. You know, it's not like it's going to go to just like stop dead into water at some point. You know, you really need to be sure that you're trading into a like, yeah, I need to have the bearish stance to be taking that opposite trade when we're trading at highs. And you know, you wait for those sweeps to occur because it will look like a shark has hit it, you know. And even then, you get your second entry on this. Like this move, there's nothing wrong with holding this long. Like, you know, I entered that long here, it would still be, you know, be a valid trade to target this, for example. I would not have been stopped out. Now, I decide for myself to take it off because, like, I'm done. I don't need to participate in this chop. I prefer to wait until the PM session starts. But you know, it will start moving at some point. But you really need to see like closures above and it trading back into here, holding it, and then go. We'll see on the 1 minute chart what that looks like. Cuts out the noise. I was showing you a 15-second chart right away. Let's have a look on ES. See that new day opening up. Where is that? Why did that move away from my chart? For ES, my upside target was, look real quick, 4-hour charts. Right here. See, ES still has some room to run. The top of the sell zone is where the 4-hour fair value gap starts. But like on a daily chart as well, we've talked about that before. We were in a deep discount today. And, you know, what is your upside target? For example, if you wanted to swing it, you know, you go for the previous day equilibrium. The divergences between ES and NQ. Okay. We'll put on a chart of ES. Okay. Like this. And take everything off. Okay, we'll use the Asian session as your reference. Okay. Red line is previous day low. What you see the difference between this one and this one? Who's the weakest one? Yes, correct. So two things can happen. Either NASDAQ will catch up to ES, or the other one will catch up with NASDAQ. You know, you get that shit when rotations are occurring. Russell's outperforming. It's up like 1.5%. We marked out that buy side, I think, yesterday, 2,300. It's tagging it now. So we need to be very cautious what's happening here. Let me have a look. See that? So I got there. I'll be very careful about initiating long positions from here. Sure, you could do breakouts. Like the ultimate target is here, of course. But let me go back to my Russell chart on the higher time frame. We'll see. Okay. Sweeping it. I did an analysis on Russell a while back. Let me have a look. Is Russ. And we'll see how that is working out. I did that a year ago. Okay. So this was the final target, and we're on our way. Mind you, this is a monthly chart. Okay. I made this analysis on the 16th of December 2023. It was not going to be an easy trade to hold, but the ultimate target will be 24.58, and then, well, maybe in 10 years, 3,200. Higher time frame NASDAQ. What is happening here? Also had made this expectation on NDX. See here, my upper target was 21,756, and we're still on our way. Nothing pulling it back. And this was also made in December last year. Okay. And why? It held an OTE. Very simple. Even on the monthly, that shit works. Okay. Don't complicate things too much. The only problem is that as day traders, we're unable to hold it because like you get these whipsaw actions, and if you're trading options, you're going to get fucked over anyway. So how do you time this? You know, I'm unable to. So I take it day by day. This here, bull case. That didn't work out, I think. That was for the 28th of September. Seasonal tendencies. Okay, so we're following the white line. I do think it lines up with the NDX things. There were 3 or 4 scenarios. I looked at 2020, 2016, and 2012. Those were all election years. And to see what price did. Okay, and I plotted them all on the chart to see which one we would follow first, and we followed the white line first, which is the better alternative for it to sell down at some point, and you know, trade back to 17,000 approximately, or maybe somewhere here, 19,000. But that's not until next year. See what else did I make in that time? OBA, I made something about that like a very long time ago. Let's see what they did. Well, that company's going to shit anyway, so. Uber. Set to buy Uber at 38, I think it was, but it did hit the entry and the target was right here. And then it sold off. Now we're back at 29. The impossible. Gold. I was looking for gold to trade when it was trading 1782, go to 1900 and even higher. But that was in 2021. All right, so Russell's actually approaching a very important pivot point here. I'm very curious if it's going to be able to break out. Would not surprise me to get a firm rejection to trade back towards these inefficiencies here. We shall see. Let's have a look real quick what NASDAQ is doing on a 1 minute. So fucking around. Okay. Are there any more questions? Things you would like me to get covered? Off. All right. I think today is also a good day to sometimes share what kind of tools I use in that sense and the type of specific models I use. I highly suggest you guys not to ask me where to get them from or how to use them, because I think it's important for you guys to first understand what the foundation of everything is in reading price action live without having anything on there. These tools, they only help in a way when you have studied them and you know the models that are working behind them. So you can slap on all these fancy indicators on your charts, but it's going to be like putting a Chinese translator onto your chart and not knowing what actually the thing means, right? So, and it will only create confusion. So I'm a bit hesitant into sharing everything in that sense. But I do want to give you a peek in what the possibilities are when you understand what is actually happening in the price action and how you can utilize these with specific tools in how algorithmic levels work, for example. So first, the tools that I use are the new week opening gaps and the new day opening gaps. If you take everything off your chart and just leave these on, you will notice that price will ping pong between them. Okay, even this low right here. If you're an options trader, it's something you can consider for yourself to trade from. So you can see the end walks are the new week opening gaps, and the end dogs are the ones that are the daily opening gaps. The only problem is that you can only trade off of them when they've actually reached in those levels. And sometimes they're very tiny and sometimes they're big. But you can see also how this new day opening gap from the 15th of October, how it happened, how it opened. It was used as a resistance, and then when New York opened up, they did a fake out and they dropped back down. And the first point of contact was the new week opening gap that opened here on Sunday. Okay. Then we broke down, rejected, but you can see how we retested it, and that also acted in the end as a resistance point, and where we made our low in the October 6th new week opening gap. So in my opinion, somehow this is going to be like a floor, unless they manage to break down in that sense, like this, and then we can see if we can trade down to the September one, for example. But until then, we have to treat this as an acceptance area, which is the reason why we keep trading up and down from them. But you can see how we're interacting from this new week opening gap to this new day opening gap, and there was also the fake out, and basically, I think, a monthly open or something like that as well. I didn't even put that part on my chart. Okay, so those are the first two ones that we're using. The other one that you are most likely aware of is the average daily range. We have basically a cap on the market a lot of times, where 80% of the times we will remain within the ADRs. And what this basically is a premium and discount zone. So anything from here to here is a discount. Reverse, course. Okay. So if we measure the 1/3 here and the 1/3 here, we measure the 1/3 here. You can divide your chart basically into quarters, where this is your midnight open. Okay, so this would be your midnight open. This is your steep discount. And this is your full discount. Okay. This is your steep premium. Oh, sorry. This is it. All right. So you can see you're better off looking for longs when we're trading steep discounts. and especially in zones that are premium, how you can look for shorts. And you would basically trade back into a discount range. And they don't, it can take a few days to pan out, for example. So, it doesn't have to do it immediately, but that's the thing. A lot of people don't have the patience to do it. Now, this is fractal. You also have this on the weekly. Okay, so let's go to a 5-minute chart, and we're going to draw out the weekly levels in that sense. Those are the blue ones. As you can see, what happened today. Yesterday, we were trading into a weekly premium. Okay, see, got rejected. And where did we go to? The discount on the weekly. See that? Now for the monthly, we also have levels. This is extreme premium on the month. It's lined up with the all-time highs. And these are extreme discounts for the month. So even if, let's say, they dropped it down to here, we could still make a V-shaped recovery all the way up here. Typically, the range for the month would remain in this bound right here. Okay. So all we're doing right now is still chopping around from premium, discount, discount to premium, etc. Any questions? Is this clear, or is something unclear in that regard? So this one, let me change this one here. Yeah. We'll put on the historical ones as well, so we can see how we interacted with them, for example. So the red ones are, or the blue ones are the weekly ones. There's this line here. The other one I use is the pivots. This one's called the kill zones, and what basically it does, it shows us where what the previous session's highs were and the previous session lows. And I customize it for my own liking, and I get alerts whenever we breach a previous session high or low. So, for example, when we have an Asia here, and I get an alert that we either break above the range of the Asian session or below, I will look for opposition trades, trade back into the mean or the opposite side of whatever is happening. You can see how that works here. When we break and we trade back into a premium, you look for continuation short because it was bearish order flow in that sense. And then at London, when the kill zone ends, you look for a mean reversion back, take out these equal highs, and you sell New York. So that's how I basically look at it. Okay. It also indicates to you on your chart where the true day opens are. The monthly open is right here. What happened today? We dipped underneath the monthly open. When bullish, what do we look for below a monthly open? Accumulation. So this also motivated me to take the long side of things. And the more they tap into it, we'll continue to look for accumulation possibilities underneath this monthly open, because on the monthly we are bullish and we expect price to go to all-time highs at some point, right? So what would be better to be mid-month and be below the midnight open? So it's basically a potential sale happening, I would say. Now, your stock will prove you wrong in that sense. Sure, it can be tough to hold for it, but yesterday we didn't get to that monthly open. I'd like to see some violence moving away from it, but since we get economic releases tomorrow, I think maybe that's the driver that will get us out of this. I'm not placing a bet either way. However, I do think we will leave whatever consolidation we are in at the moment, and it will be either tomorrow or on Friday because we have economic releases. Another indicator I have is basically fair value gaps, really quickly, where you can see price has not been balanced. Fractal, you can see it on all time frames. There's one from Lux Algo, it's free. Um, I would suggest putting that thing on a smaller time frame chart, and you can see how the 15-second even starts behaving around them and how violently they will rebalance and whipsaw around when, especially when trading from in a discount zone, going back into premium, etc. So I would use that as a study. I've customized mine in that sense that I only want to see the 15-minute ones that are of importance, and it will draw them out for me. So I know, for example, right now we're on the discount portion of the bearish 15-minute fair value gap. However, we are respecting a bullish one where we broke back above and now testing the mid with that. So, you know, so this would mean that we have some more potential upside to retest maybe higher levels up here. 15-minute fair value gaps are tough to trade if you don't know what you're doing. The other tool I use is the FX4 model. That plots out the Asia session highs and the lows. Those are the dashed lines that you see on my chart. And it plots the midnight open, previous day low, previous day high, and the previous day equilibrium, which gives me in a single glance really exactly where premium is on the higher time frame on the day. Let me see what else I have. There are some other models that I also trade in that sense. But I'll leave that, I think, for another time. Yeah, it's always good to look at two different charts. It's very simple in this sense here. I have two time frames. I look on the 1 minute and I flick through the 15-minute in that sense. I trade off my 1 minute chart, sometimes the 15-second chart, depending if there aren't any gaps. I will move up a time frame when it becomes more clear. And in this case, in these cases, like when I see a lot of shopping around, I'm not even looking at the lower time frames because you will just be able to see everything on the higher time frames. There are also some things that I look at and tools that I use for gaps, for example. And the reason is because I do not have the time to flick through the charts. Since I'm trading multiple platforms, either top step, and you can do it like this on RTH, ETH, but I'm part of a study group and with some ICT traders that I've met when I started trading these concepts. And these guys are masters in coding, and they've programmed everything that we need in all those tools, which makes life for me a lot easier in that sense when I'm lazy or on my phone and I have access to all of them, and I'm also a tester for them in that sense, where they request feedback on other ideas that people bring out, if that makes sense, and if it's something they can make tradable. And we have webinars a lot of times around the opening of the New York session, where we will discuss these things. And we keep testing them out. And there are some really smart people in there in that group, which put in a lot of work over the years. So yeah, where they do statistical mapping, I'm not a big fan of like using those tools in that sense because it makes you lazy, and if you don't know what to do with it, it's going to slap you in the face. because they work at times when they should work, and a lot of people don't know when to use them properly. However, in specific conditions, I do set alerts when we've reached like extreme levels, and then I will act on it and use my ICT knowledge that I have in regards to fair value gaps and trading into a premium and discount to trade away from those levels. Simple as that. So yeah, and basically I'm trading a different type of model every section of the day. And like you guys know, I like to trade my golden nugget when the conditions are right for that, and it should start playing around with it at 12:30 again. We need to keep an eye on that time frame there. Yes, Addy, always start with a clean chart. Take all that mumbo jumbo off, identify it, and see if they align with whatever you have. Okay. The point of it is like first to understand what is really happening. In the end, you only need to target a previous day high or a previous day low, or whatever range mid that we have. Trading from premium to discount into and out of a fair value gap. More than that is nothing. Jorov asking, when you first started trading, did you start with a few strategies, models? Did you learn most of them first and traded them together? I started gambling, not knowing what the fuck I was doing. Then I started to look into trading with volume profile. I used the candle indicators, wave tech shit, and got burned too many times and wanted to find precision into what I was doing because I saw specific things occurring, happening at specific times of the day, and I thought there must be someone that's a little smarter than I am that has sort of cracked that code in that sense. And about 5 years ago or 4 years ago, I got into the mentorship program of ICT in 2019, I think it was. Yeah, right before COVID. And and then I started to study my ass off. And I basically only traded one model, which was the London session, breaking the Asian range and trading back into the mean of it. And or shorting the Asia high when it got breached and trading back on acceptance from an Asia high back to an Asia low. And that's all I did for many years. And in the meantime, I studied for like a very long time. The only problem that I ran into over the years is that you know too much at some point. So I would like highly suggest you don't dig into much into why things move the way they move. Just accept that they're moving, right? And honestly, sometimes the dumbest people are the best traders in that sense because they're just programmed to do one specific thing and not like think too much inside the box, let's say. And they're so like looking back over all these years, I think the easiest thing would be is to like find something that suits your liking, where you're able to extract what you need from these markets, and just only do that every day. So, and if that play gives you $1,000, you can consider managing that risk better for it to make you 4,000 or 15,000. Yes, because if you add too many things to it, like ICT's got 80 different type of setups that you can trade, right? And like I don't know, over the years I think I learned about 15 or 20 of them. In the end, the ones that fit me most are optimal trade entries, to trade back to relatively equal highs and lows, and a premium or discount array. And it's the simplest thing there is because I don't need nothing on my chart for that.
I can just see it here. I could just trade it off my phone. When I'm in the gym or something like that, I'll just re-enter it. Like all the precision trades I'm doing with you guys here, because I'm behind the computer. But this is also my business. So in that sense, you have to treat this as a business. It's serious stuff. And I'm always keen to learning new things, like trading options and those kind of things. And the reason why I'm doing that is to be able to take a more relaxed stance where I won't have to stare at the charts, where I can just like have a weekly bias and just let the trade run. Let me have a look where we are at right now. Model 11. Nope. So right now we're in no man's land in that sense. We're going to be waiting for a new time window to start. Like they can do a lot of things in this area. They can drop it up and down. The golden nugget in the past few days has been a little bit shitty in that sense, but that's normal because we get like the big moves beforehand. So you can see that yesterday was like a choppy one, but you got to move before it. So that was something to stay away from. And what I like when the golden nugget takes out the previous session, or either the AM session high or the low. So it's quite simple. So whenever 11 a.m., anytime we take out a previous session high or low, that's when I activate to participate in the golden nugget. Yesterday I couldn't because there wasn't. Today we're inside of the New York AM session. So I'll need to wait until, for example, either this level gets taken or this level gets taken. However, we have a higher time frame bias. Since we took this optimal trade entry long, you have to assume that we're going to go back up here. Most likely we'll get like either a continuation move down in the PM session, or if they flush it, a reversal. So always like be open for both sides. Okay. No matter what happens, your drawn liquidity is up here for the bullseye. All these equal highs are right here. It doesn't look nice to me to leave that behind if we're really that bearish. A monthly open, we're holding that, accumulating below it. Put that on a 1 minute chart. You can see what I mean. This was your monthly open. Let's see what ES has been doing. I think ES is still above it, right? Let me take this one off. Oh, it's down here. So no, we're not going to even worry about shorting that. I wouldn't even consider taking like big puts on ES, thinking it's going to go drop down to somewhere. It didn't even bother, I think, breaking below previous day low yesterday. Okay, so you see the low from the previous day. We didn't get that close underneath it. Nasdaq did, and we traded back up to it. That's fine. But ES didn't. So I wouldn't even consider opening puts. There's nothing happening on the chart telling me this shit's going to go down or in a big way. I'm trying to figure something out. I think ES opened up in the gap down, right? Gap up. So they filled the gap right back here. So fucking around with this. It's also in here. That's your resistance for now. Anyway, but you see what I mean with acceptance back into these Asian ranges. As soon as you get like these body closures, especially on the 5-minute chart, back in that range, you can target the mid of it if there's enough range. ES doesn't have much range. That's something I like to trade in that sense, except for options. But even today, if you wanted to ping pong, 5 points, could have. Would have been easy. But 10 points.
Except your risk would have also needed to be that. So you could have done a 1-to-1 on that, or maybe waited for a discount zone here. Quick look at the currencies. I'm still waiting for 60 to drop down to this zone right here. Potential buy area. Convert my cash back into euros. Holding the mid, but we haven't really traded it into a steep discount in that sense. Okay. Dollar, I think I'm bearish on that. A higher time frame. Gold, I had upside targets, and I wanted to trade towards to reaching that. Oil. We plotted out this range last week, right? We were messing around with. Been going back and forth. Overall bearish, but we'll see. I think people are underestimating the use of fossil fuels here in Europe and in China, especially. I see it around me how electrification here, at least in our country, is becoming a pretty big thing, and even down in the Caribbean, on the islands where I'm from, even seeing large electrification there. And as long as there's a big oil refinery down on that island, which is dirty as hell, and it's been closed now for over 6 years because of lack of demand. And it's one of the few places that can refine the crude oil from Venezuela, which is a really dirty crude oil to refine. Let me show you a picture what that looks like. Hold on. And it's abandoned. Let me change my windows. So this oil refinery here is in the Caribbean, and it was making a big mess. Like this would come out of the stacks always. And about 70% of all the world fuel during World War II was refined here, by the way. And they shut it down, and because it's becoming unprofitable in that sense, which is forcing actually the electrification part, going solar and wind and those kind of things, to accelerate, because there's a lot of shit that comes, environmental damage that occurs with it. And in the past, they used to dump shell. They have this thing here. Asphalt. Here. Here. This is where they dump all that stuff. Right here in the bay. So all the fish and everything we're getting contaminated. You can even see it on satellite pictures here. So growing up here, I'm completely against oil, and I know some of you guys are petrol heads and those kind of things, but I've seen the damage it's done to the community that I live there, that I've grown up with. So I'm actually very pro into finding alternatives, let it be nuclear or something like that, or I don't care, but just not this crap that's being pumped out of the ground, unless they know how to clean up after that mess, and they're not. And they're left holding the bag there, and they don't have the funds to clean it up because all the companies they pull away their money from it for profits, and this is just one part of the world, let alone the Nigerian part. You can see here, and a lot of people got cancer from it and that kind of stuff. And no one's helping them out. Let me change my windows. Are you guys seeing my trading view again, or at this window? Can someone confirm that you're seeing my trading view? Okay, perfect. All right, let's go back to NASDAQ to see what we're getting. So I'm looking for that 1230 run on liquidity, and I'll see what they give us from there. Bias is to trade up here. We don't have to do anything because it looks like there are no participants active at the moment, so which is fine. We've completed the job that we needed to do, is take out these early longs from yesterday. There's a busy here for value gap that we can keep track of. I think that's on the hourly or on the 4-hour. Why did I draw? Oh, this is an order block. Yeah. So this green box that you see right here is an order block that I identified where I'd like to see price close back above. Okay, yesterday we closed underneath it, which is fine, but today is going to be key that we close above this level and start moving again towards this area here. Are there any questions? See someone's typing still. My London setups. Yeah, it's quite simple. So every day we have a daily range of the Asia session. The only thing I wait for is either that high or low of the Asian session to be swept. So let's put on a chart with, hold on 1 second. That's out there. Okay. Um, okay. So we have an Asian range that will take place every day. And let me just change this to NQZ and put this on a 5-minute chart. You have a high and you have a low every day. Okay, we'll put this on 2300, put on 15 historical sessions, take the standard deviations of so put this one on as well. I think this is better. You see my chart? Is it clear? Yeah? Okay, cool. So I wake up when for you guys when it's midnight a lot of times. So the first thing where my attention goes to is where the midnight has opened, and I look for shorts above or longs below it. Okay. However, I like them to sweep either the Asia high, except for when they're in weak markets where I think we have like unfinished business lower, for example, to retest the previous day high or a previous day open or whatever swing high that was there. When London opens up at specific times, I start looking for signatures that show up. So at 1:30 approximately is when a lot of times they will sweep specific areas, either a high or a low, and I will look to trade back into the range and for a continuation move to either a previous day high or a previous day low. So let's see how it went here on Sunday. Okay. So notice how you have an Asian range here. Quite clear. The Asian session stops at midnight open, and you have a midnight open there. Notice the same story comes back into play with having a premium and a discount. Okay. Where is price going to? You have a true day open. It's indicated right here on your chart. Right here. See that? 2018. So we're trading into a premium area where I will look for shorts to trade back down to the Asia low, and then for a continuation move down. So you can hold it for the London session until 5 a.m. approximately. And we'll now add the London session, and you can see how the London session interacts. And I'm talking about the cash. So what they do is they do a false breakout, as always. Like the first move in London is always fake. Okay. The London session for me starts at 2 a.m. 3 a.m. is when the cash opens up. That move is fake. That happens. And then, they do a continuation move down. And look where they stopped at 5 is at a previous day high. See that? Right here. That was the high from here. Sure, they can continue back down, but they go to previous sessions to retest where they came from. So I look for premium and discount levels in that zone. My expectation is not high, since I have a tool that tells me exactly what the average range is of a particular session. So typical for the Asian session in NASDAQ is that you should not have more than, it's between 20 and 50 points. Anything beyond that bound, most of the time I stay out. And we'll add the London session, and it will show you what you can expect for London session for ranges typically. So, and that one runs from 2 a.m. to 5 a.m., which I like trading. We'll take the London session off. So the normal range is between 50 and 63 points for the London session. So I'm not aiming for anything more than that. And that is why I came up with my 20 points to grab my money and run in that sense. Okay. Another thing I keep track of are standard deviation levels, for example. So you have a London range or an Asian range. Once we reach towards like 0.5 standard deviation level, that's a good place for me to take profits if I was long and holding it into the New York session. You can see here, we took out these Asia low stops, for example, right here. This is my favorite setup when they do this. And there's a PD array here that is confirming that most of the time there's a fair value gap supporting that on the lower time frame, or either a previous wick with a 50% retracement. And you can, you will find a lot of times the low of the day, and you can trade it back to whatever range has happened before. You can see how they interact with each other, right? Okay, so they always go back to previous sessions and retest where they came from. Same here. Have this range right here, consolidation area. When things get overextended, see how they go trade back into those ranges. You get nice bounces up. So I think that is clear for now, but not sure if anything's unclear for you, Photo. In short, I wait for the sweep to occur and take the opposition and trade back into the middle of the range. And what happens a lot of times in New York, you will see that we will go back and recheck a previous session range. So let's say the New York AM session starts and they were bearish and Asia went down, London went down. A lot of times you will see New York sweep them in context of the 10 a.m. Okay, this day didn't count because there was like a bank holiday and that kind of thing. But same thing here. You see, first thing, New York opened up. What did we do? We took out the London low, and boop, went to the Asia high. See here, after taking the London low. Okay, these are economic events at 8:30. And like technically, the New York AM session starts at 7 a.m. Well, 8:30 to be honest. Let me see, according to ICT. So let me adjust that on the chart. It will broaden your perspective a little bit on what happens actually at 8:30. But you can start hunting for these setups at 7 a.m. in pre-market. Change to 7 a.m. Make the AM session like this. For me, that's when it starts, because you get an open at 7. The 4-hour actually starts at 6, right? So that 4-hour area part that runs from 6 a.m. to 10 a.m. it would look like this. This is your open, high, low, close. Basically a 4-hour candle looks like. Notice when they close at 10 a.m. at the high, you can always short it back down to 20% of whatever range they closed at. Same at the low, see? This is your open, high, low, close, what I've teach you guys about before. Same here. See, when they close at 10 a.m. at like fucking low, retrace it back up. When we're consolidating, no need to do it. Okay. See here it just continues, but this is in a different context because your drawn liquidity is to these equal highs up here. Okay. So it just speeds, goes up against. It opened up and it just left. But a week later, we're back in this zone. This is for the auction, which was the reason what the fair value gap that I pointed out to you guys, which I liked. It's not going to go there in one shot, but we will get there at some point. Maybe they'll just do something like this tomorrow for the economic release and then drop it down. And then after that has been auctioned, we'll look for a reversal trade back up. But that's a game plan for tomorrow, not for today. With this, you can identify your fractal consolidations. What did it pose? Let's see how we can. These are basically your market maker buy and sell models, or your AMDs. You know, accumulation, manipulation, distribution. I don't know if you guys remember the chart that I shared with you guys. I posted it back into the Discord. again, was it last week? Where I told you guys that, here's a look. Yeah, I showed you like the way it looks like, that what a smart money reversal setup looks like, and that we have like, this is the reversal, for example, right here. And then this is your first stage accumulations for continuation move down, and then we'll, you know, get that same process on the lower end again, where we get a smart money reversal on the lower end, and that would look like this. So, you know, which is the reason why I do not think this is the low, like let's say the all-time highs, but you know, you have to take that into account. We'll take it day by day. It's not going to be very clear how that looks like. You want to take like a higher time frame PD array, something like this out for that to occur. I did not do that. Hold on a second. I will look into the chat. Oh, this picture right here. I'll repost it. And you can draw this manually by just looking at consolidations. Okay. You see the picture in the chat, for example. No. If they wanted to go down, really like, but for now I want to trade into that, you know, for them to create that trap like this. So you look for longs above here, very simple. And you will look for shorts on a breakdown of this. This is the current trading range, and it will tell you exactly where premium discount is. Anything above here is premium, below that is discount.
Closing order filled. Closing order filled. What will be discount in the current range? It's very simple. It's just, what is the current high and the current low? What is discount? What is premium? So like, I knew we were trading here, so I'm just like, what is being presented in front of me at the moment? We have a high, we have a low. Whenever I see price trading back into this, for example, here, and I'm of the opinion that like we should explore also higher, but you know, I'm able to grab my 20 points out of it, which is the reason why I was long from here and started to peel off. Okay, I will leave a runner on, but like, you know, I don't need to even have to worry about that it's going to go against me in that sense. So this is your premium discount flip zone.
The text. How can we make the text a different color? Yellow, maybe. It doesn't matter. You can see what I mean. The 50% mark is right here. And this is your premium zone. So, you know, along from this zone right here, it's also like, even here, you can draw these little OTEs, right? See that? Trade up to this pivot here. Okay, it's all fractal, different things. But you know, if you're able to identify where you are able to grab those 20 points on Nasdaq, why not? It's a 30-point trade. Okay. Now do the math on this. Okay. You enter here. Your risk is defined. You can even like narrow your stops to this low right here, right? And just trade it up to where I traded to. So you see what the possible return or potential return is at. Well, you know, in these market conditions, I'm able to trade with bigger lots. So I do it with this, take half off. And I'll leave runners for a sweeper. My stop is right here on these lows. No, all bullshit. They're very nice after the fact. And the move is already done. Why would I be paying attention to a trendline break if I'm able to nail bottoms and tops? By the time they form, I'm already out. I've already gotten out of the market. That's retail stuff. They keep track of that. I'm sure some of them can make it work for them, but you have to have the risk appetite for that as also. So, I mean, it's very nice to talk about it, and like sometimes you know, we have to name it or give it a name to give it reasoning, which is fine. But in the end, you'll find a fair value gap in there, and either a premium discount or an OTE that you can trade off from. Let's see. Let's try something out for you guys because I think they even have those indicators. I mean, those are all traps. Head and shoulders chart pattern. Inverted head and shoulder pattern. What else do you have?
trend line. Auto trend lines. I mean, it's going to become a disco, right? Jesus Christ. Which one do you use? I mean, they work when they work, and when they fail miserably, right? It's like, let's just have an example here. Okay, so hypothetically, we would say we're buying this here in this discount right here. This is by any means no entry. Let me be clear about that. But how would a trend line be able to tell you and identify you these discount levels right here to enter into a trade?
Let me take this shit off. Okay, let's go look at the inverse head and shoulder patterns. Like if you're using an indicator, retail would see this as an inverse head and shoulder for a continuation move up. It failed miserably. Okay, on the lower time frame. Left shoulder, right shoulder, head, perfect, you know. Anyway, that's our liquidity. We're ahead of that curve because we're actually anticipating for it to fail right here. Now, what trend line could you have used here? In that sense, let's pretend that this was your trend line. You're looking for a breakout, right? Okay, sure, you got your entry. You would be targeting, technically you would be targeting this zone right here, and then what? So you're gonna grab 20 points knowing that at this time of day, opening up in a gap down, you're gonna go down 100 points? No, I'll pass. I'm sure you can make it fit at some time frame, right? But it's the consistency that is of the importance. Because it's very simple here. We can look at consolidations. Yeah, you see this blue box here? We faked out, broke back underneath it, traded back into a discount of that box, reverted back, and you know, double tops. Yeah, I'll look at it, but later on I'll use them as targets. Like even here, you know, when you look how fucking nasty this shit was here. You'll be able to identify your premium and discount levels from this. Okay. See, premium 50% mid, short. Trade target right here. Stops right dead in its tracks, right there. Punches back up. You can get a 2.5 standard deviation just by drawing the fit based on this. You know, like even here, what would you do with your trend line? Like, you know, it was pointing down. Like I said, you know, we're going to be trading back into this zone. Look for a reversal. There was nothing there in a trend line showing you that this would occur. And, you know, it's perfectly fine. Sure, it can fail and it will go back, you know, seeing these imbalances. I'm already ahead of the curve. I know we're going to go rebalance this out and to be careful with the locks and wait for it. You know, what's rule number one? We're in the premium. We're not going long. We need to wait for it to come to a discount zone or either take out stops or be supportive of a fair value gap. And you can leave your stop very tight on this. Like even if you say, hey, you know, I want to give this bomb a shot. Put it right here, and you leave your stop right here. Okay. Okay. One tick below that low. I don't like this. I see a gap here, so it's not a trade I would take. But you can have a 2-to-1 risk reward ratio again from here. All right. Are there any questions and trade setups that you'd like me to cover? And for example,
Tell me what you guys look for on a typical day, and then I will try to make a narrative around that to make things a bit more clear, and maybe filter out the bad decisions that you make when you enter into a trade. I'll be back in 2 minutes, going to grab a drink. Put the poor music back on.
The optimize. Right now I'm focusing on just identifying reversals, OTE selection, and liquidity draws. Levels I have a harder time with picking because there are so many to choose from. I wish there was a simpler framework. Well, the thing is that you're probably on your charts like the majority of the time of your day, right?
Closing order, Phil.
Do some more off here. So you notice how I'm not waiting for that sweep to happen. I grab my money and I run before we even reach those levels. And I'm okay with that. And the reason is because these moves can get violent and you will not always get filled to the tick. Sometimes you never know when it reverses. Like, preferably you'd like to see it like sweep above a specific level. And then reverse back down like this. And then, so coming back to your question, optimize. Look, when you're looking for a sweep to occur, can you share what your goal is to extract out of the market when it comes to amount of points or dollar amount? And what's the risk you are willing to take on that? And then we'll see if we can find something that keeps reoccurring, and change our expectations on what the market is and make it realistic. Okay, so don't come with shit like you want to make like 10K out of one trade. That's not going to happen, because if you're not able to make $100 out of it, then you're not going to be able to make 10K. So I'm waiting for you to answer. But what you want to look for these type of things is like when we go external, trade back internally for a continuation move up. Let me have a look. I'm usually looking at 1 end of day trade to take with options, 2 to sell short options at extremes, 3 long 1 to 2 day swings. Okay. So for options, we need to go to SPX. Here's your head and shoulder that would have worked, right? Just kidding. That's fucking right. Okay. I understand what you mean. So you basically want to simplify your entries. How about you start looking at different times of day to participate in? For example, 10 a.m. Is that a time where you are usually on the screen? Two p.m. Okay. let's look at 2 p.m. So basically, you're fit to trade the PM session. Okay. All we're going to do is take everything off the charts here and identify the PM sessions. Okay. Take the fractal consolidations off. And what I want you to start doing is to study all the past 4-hour candles on the futures. And you have to identify, for example, in that box, you have that kill zone tool, I think, on your charts also as well, right? So look, keep it simple. Go back to ES. Since you're trading options, we need to keep track of the futures there. The anatomy of the last 4-hour candle. You have open. Or actually, it doesn't really matter which one. It's a 10 a.m., it's a 4 a.m., and they're all the same. So you have to have sort of like a bias if there's going to be a continuation move to either the upside or the downside. You want to trade 0 dates, you need to wait until the final countdown, let's say, of thing. But you have it open. When we're bullish, a low, a little bit like this, like a wick, like that, and typically we would close up here. You've seen me drawing it before, where you have like your TGIF setup type thing. Candle would look like this. You have a high, a low, and we would close typically between the 20 and 30% range. Now, this final part only happens in the last 30 minutes, most of the time. And you need to backtest that for yourself to make that workable. But let's pop on a 4-hour candle on these things. Hour 3. Take this one off here. Change this to a 4-hour candle. And we'll do a quick market replay. How that candle works. Where's replay? Right here. Okay. So you can see here off the bat, this, for example, is 10 a.m. Okay. Let's go here. Select bar. And we'll leave only 2. So we know what the previous candle has done. So off the bat here, you can see 10 a.m. hits, right? But notice that the previous 4-hour candle closed right here. This was last Friday, okay? That this is a break of market structure because the previous high of the 4-hour was right here, and we're actually closing above it. Now at that point, your attention at 10 a.m. is not to look for shorts, but to look for potential long entries. And it's very simple because we're closing like a few minutes before to go there. And remember what I told you about drawing those things. I don't know what the high is going to be, so let's go to the next bar.
But notice how they wicked down exactly to that 20% level at 10 a.m. So in theory, we're looking for a continuation move up. Buy that. You're in. It's your first scale. See that? Taking out these highs. Now, you know, sure, we can reverse. You have your stop in place right here. Your draw on liquidity is right here. See if we can get it. Well, that was quick. Okay. So you would look like a place like that in that sense. Is that clear? Someone type something in the chat. At least know that you're understanding what I'm trying to tell you. Now we're going to continue on to 2 p.m. Now look, this is where the London closes, approximately. You get a retracement back. All we're doing is trading back to discount. We're retesting a previous high. Price consolidates. Should go back to the mid at your discount level. Let's pretend that you're bullish. We're going to be trading back to these relatively equal highs. Please, entries are not going to be precise. Oh wait, 2 p.m. Go back. What do we have here? 2 p.m. opens up. We've left these highs behind. And you can look at lower time frames to see if there are any fair value gaps underneath or above it in that sense. Okay. You know, like since for me, we've already traded into like this discount zone right here. I will show you what I mean with that. If you have this entire range, notice how where I went long was below the mid of whatever range we had, which aligns with the higher time frame narrative that we should continue at. It can fill, but in theory, we should hit it just like that. The 2 p.m. is always either a continuation move of whichever trend is going, but you have to know what the draw on liquidity is. Now, you want to make this tradable in the final hour. Then you have a range, and you keep moving your goalposts to whatever it is. And you have to backtest this over time and keep practicing to see how it behaves and if you recognize certain behavior that has occurred. Because a lot of times you will see reversals trading back into a discount zone. So, and whereas that is right here, but there's one issue that happened here. At 3 p.m., what did they do? They took out the buy side liquidity and they started reversing down. And you need to study these type of reversal patterns at specific times of day. Target the opposite side to trade it back into discount. Now remember that 100% thing that I drew out here, I think it was, but that was that low. Before you even consider taking longs again, you know, wait for them to sweep these relatively equal lows right here. Now, this is the end of the day. Asia session opens up. You know, they take out these guys and they start drifting back to where? What's here? 50% to premium, right? And you keep fooling around with it. But like, this is the Asian session. we're asleep most of the time. I don't trade the Asian session, so I don't know what the behavior is. The ranges aren't that big. You can I like to see them consolidate, and you can even just like divide that range into different sections, into discount and premium zones, because at one point we'll start taking out either side of that entire range. So this is London, approximately. We have an Asian range. We're looking for shorts above premium, and we're looking for longs and discount. Cash opens up, trades into the premium right now. They also want to take part that taking out the buy side. And you keep moving that goalpost of those candles where we are in the context. This is a short. Where do you go to? Previous opening or close, or discount or premium zone of that again. Now, how would this translate into today? Take this out. 2 p.m. is going to be opening right here, right? What are you seeing? What I just showed you before. When we first started this trade, do you see any similarities by any chance? Come on, guys, type something. I don't feel like talking to a wall. Otherwise, I'm going to cut this stream off.
Yeah, and what else are you seeing? What did where's the high of the previous 4-hour candle? Where's your Asia high? This ES has a different profile than NASDAQ, but we're trading options right now. So I'm just trying to give you guys an understanding of what is happening and what can you anticipate for the next 4 hours. What is a change of state of delivery? Power of 3. It's in the ICT thing. All the information I've posted. Yes, exactly. So what does that mean for your bias? Yeah. So since we are, it depends where we close. We still have time. Still, how many hours? 45 minutes to go. You already can start keeping track of your premium discount zones. We expect a 4-hour candle to close around in this range here. Your discount zones are right here. So if we were to go down at 2 p.m., first thing you're going to be looking for, if we start going for the high first, that's going to be a problem, because that could be a reversal candle as well in that sense. But you would want to see the opening, a manipulation like down into a discount zone. You're going to be looking for fair value gaps either on a 15-minute chart or on an hourly chart to be able to support your thesis. And then look for a continuation move up to where? To these equal highs up here. We'll take this sell zone off. It's irrelevant. Really important. Give me 1 second. I need to take this call. Okay. Optimize you could, but the problem is in this case, let's say, and let's pretend that we want to measure an optimal trade entry based on this 4-hour candle. I would not want to be the one to participate from that because we would clear out all these things here, and sure, it can be an entry, but it's a retracement too deep for that time of day for me to participate in. Okay, so I'm going to take everything off here. I mean, let's say you want your optimal trade entry from here to here. I'll draw it out. Why would you want to not short to it if you are so certain it was going to go down there? I mean, let's say we're from here to here. Okay, that's a 20-point move, right? I mean, ES would need to go into the red, or yeah, it could. You know, the only thing you got going for you in that sense. And let me be clear about that. It cannot be wrong. It's not wrong because like this technically is going to be your order block as well, right? So the only thing is like I suspect if they're going to be doing that, they're not going to be doing that into power hour. But sure, you can plan for it, manage your risk accordingly. Your stop will need to be underneath this low right here. Well, let's first see if it respects like these lower time frame OTEs in that sense. And look for alignments because we look for these closes to occur. And maybe they'll do a violent sweep like like they did on Friday. Those huge wicks down. But that's also indicative of that the top is near. When you see them going a little deeper than what you expect. Let me draw out this 30% retracement. We'll draw out the OT. Ahead of time. Now, this 4-hour here, for now it qualifies an order block, but it really needs to like close here. So that is important. So the TGIF. I'm just going to add one more candle in the 4-hour to get a little bit more context on what has happened. A few more. Okay. We have one problem. ES just traded into that 4-hour order block or bearish for value gap, right? See that?
No bueno. I'd be very careful with longs. Let's see. If they trade it back into a discount, you can keep track of that OTE. Now, what are scenarios that we can keep track of is that we open up, take out these stops, manipulation up, and drive it back down into discount. And then maybe take out the stops on the low end. We trace back 20% of whatever move they have. Well, we'll see. The bull case is going to be the opposite. Keep an eye on that OTE. Like, honestly, I would have been short here already to trade it back into discount. And let's have a look at NASDAQ, see where I exited, if it was good, and why. Okay. So we hit that target that I mentioned to the tick. Told you I get out before it. So that was a very valid trade. Let's go look at the consolidations. Okay, see, we broke above. We're trading back internally. This is your discount zone. You can look for alignments to see if we have fair value gaps there in this zone right here. If you think we're going to continue up, is your 4-hour chart. I don't like these equal highs up here for now, since we took out these guys first here. I do think we're going to continue up, but we'll really need to wait for these discounts. So at 2 p.m. here on NASDAQ, let's watch this zone right here. Took up 40 minutes. We have a high, we have a low. This one right here. Your OTE is going to be here. No. Let's try. You're gonna have to watch this zone right here. See, we have alignments with extreme targets up here. Yeah, for those equal highs. Yes, we do. Notice how this trade that we made here only just now got completed. And now we'll wait for the next one. So there are two potential reversal areas. It's either the blue line or the swing OTE after they've taken out these stops in the wall. But we'll see what they'll get. Here TGIF levels for this 4-hour close is going to be. This doesn't qualify as an order block until we actually move away from here, like this, and then retrade back. Go like. We need to move this distance to the top. And that's going to be your second stage accumulation. But like I said, I showed you guys the picture that we've had before, where we look for these sweeps to occur and then have a bear stance go down. In options, would that long time to complete the trade kill you versus trading futures? Well, options is, John can tell you more about that in that sense. The thing is, it's with options, you have two forces against you. It's time and decay and those kind of things. You need to have the time right in that sense. And if you manage how to do it, yeah, kudos. But I wouldn't. I only do it in certain conditions when we are at specific lows, and I do it only like 10 minutes before the close or something like that, or whenever I think London is going to make the low and I don't want to be on the charts, I will open up calls or puts in that sense. I don't know. I don't know anything about kind of things. I'm still learning them myself. I've only started trading spreads recently in the past 3 weeks, and doing good so far because I managed to pick tops easily or either lows. And yeah, so at 10 a.m. when I look for these reversals to occur, either at the low, like today, I opened up put spread, I think, because I thought the ES was not going to be dropping down a specific level. So I opened, let me have a look real quick. I opened I sold the 57.80 and I bought the 57.90 and let it run, So, and I already got like, it already traded to like almost worthless, to like 30 cents or something like that. Because it cost me, I think, the time when I entered, like $3 or something like that. So that was fine. Yeah, we'll put spread. And sometimes when I feel comfortable, I put on a bit more size, but sometimes I don't. But I've been doing quite okay on them, I think. I haven't incurred any losses on them yet so far. Yes, we'll put spread for upward bias. Now pay close attention to this fair value gap right here. Notice how we are wicking above premium in here. Like even in the fair value gap, you can divide it up into quarters. Okay, target is here, the blue line. Like I would typically scalp shorts from here when I'm not tired. I would like enter here, stop right here, scale right here. These are just like really stupid quick setups I like to take. This would be my scale. As soon as the scale is out, I leave the stop. I put the stop to break even. My entry would have been most likely here on the mid, right here. And does that mean I'm bearish? No, because I think, we could still go up. What's the highest up close candle that we have here? This one. Order block. See that? How we're respecting the mid of the body and going down. And that's how, even if you just only traded order blocks, you could have done this. Okay, your stop would have needed to be here, but technically still valid. Now, in regards to, let's say, a sweep, right? Um, how far can a sweep go? That's the other tool I use is liquidity depth. Over time, you understand how deep they are visually for you. You have like three depths, how far they can go and pierce algorithmically into. So I still have like basically, we can end up for today to either take out this or this. Since we've already accomplished all of this shit here, I would expect price to trade back and take out this. We shall see. As you can see, the short would still be valid. It can fail. If it breaks above, well, obviously we're going to be heading towards here, right? But this is not the time of day to participate in a trade, especially when we're close to the 2 p.m. So, you sit on your hands until then. Let's see. 4-hour candle is going to be push or not. Another thing you don't want to see is like if you have a bearish or value gap and you start seeing body closures above it, you need to start looking for it to act as an inversion. And the only issue is that we're having with this is like I've been taught or thought that you want to see speed away from them, right? And initially you did get that speed, but you know, you have to really stick with your higher time frame narrative, for example, to um, trade with the trend when it's currently being shown to you, right? Which was why primarily we're looking for longs to accumulate after the 2 p.m. open. But we'll see. If they sweep this part out first when they open up, um, you can expect them to drop price later on. But that's going to take time to unfold. I don't think I will be on for that because I'm getting tired. Optimize. Assuming 2 p.m. is a continuation move from the 10 a.m. 4-hour candle, one would be looking for the middle of the 4-hour fair value gap as a target. On ES is a little different story being told, I think, right? Look, the discount is running all the way to, like on a daily, we're still on a discount, right? So I would like be very careful not to trade much higher than previous day equilibrium, because if you draw an OTE based on the previous day range, keep track of that level also, because like there's enough points for you to make money off of it to trade towards that. Oh, you see, well, you know, it's getting tricky because like you have your previous day equilibrium on ES, which is 58.82. And if we draw the OTE from the previous day, like the previous day equilibrium would be a place for me to exit, to be honest. It needs to prove to me on a higher time frame that we are bullish enough where we would make like sweep all those highs and then trade back into a discount where you would take the second leg up. That's basically what it comes down to. So this is your short zone, really, if you're gonna look for continuation moves down. Keep track, see how we react from there. Like, you know, you have to keep in mind that we're still in an uptrend. I don't, on ES, it's quite simple. I do not like how they left these. You see how it's been dripping down, and this move did not cause or take out any of these early shorts. So, which leads me to believe that we're still going to be trading up at some point. But we will also trade back into a discount before you can position for that. Yeah, anytime, Jara. Okay, so, you know, overall, we had this consolidation right here. We're breaking back above it. We traded back into it here on ES. This happened exactly when we pulled the nugget, I guess. Trading back above. They really need to start holding this. Keep track of this, how this 4-hour closes. Keep track of the blue line that I showed you to you guys. It doesn't have to trade back all the way down here. We can look on the 15-minute chart, and the reason why I don't trade ES, it's a bit more wiki in that sense. The only thing what I do not like about this is how they're, you see all these little gaps here on the 15-minute chart, these imbalances. I expect them to refill. Oh, they already did. Okay. Well, we'll see. Watch and learn. On NASDAQ, same story. Except for I'm not as bullish on that compared to ES. So there is a big divergence in my bias. But we'll keep track of this mid and this OTE. For longs, you wanted to trade back into it, preferably even take out these stops right here and then take out these guys up here. All right, guys, I'm going to call it a day. It's been a long day for me. I've been up since 5 a.m. for me this morning, and it's now 8 p.m. And we'll see what the market gives us. I'm going to prepare myself mentally to maybe play some trades for tomorrow and finish up some things. And then if you guys have any questions, feel free to ask next time when we're doing the stream, and try to prepare something, because like I feel like I'm repeating myself constantly, and I wouldn't mind sharing with you guys what, let's say, my thoughts were on trade plans that you guys are struggling with, where we can work on specific areas where we can improve things on. But I'm not going to continue to repeat what I'm doing here in that sense, because I think it's quite clear how I trade, and I'm not sure if there are any new people in here that keep hearing that. But we'll do that in the chat, and then I would like to get some more structure into where we will be covering specific things in how to improve your trading in that sense, and not what I'm doing. All right, bye-bye.